Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today we're taking a look at the 30-year bonds. Now, the 30-year bonds, if you're not very familiar with them, are a little bit of a slower market. They do have good movement. They are fairly consistent in terms of movement, but they are really, really slow. They are also very expensive per tick, coming in at $31.50 or $31.25 a tick. You've got a lot of leverage built into this, so it's kind of a good thing that it doesn't move around a whole lot. But when we're looking at the movement of such a slow, methodical market, we have to assume that everything it's doing is very efficient. There are so many contracts trading hands, there are so many things that are happening that it doesn't have a choice. It has to be efficient. It's like the S&P, which is one of the most efficient markets there are in the futures markets. When it does something, it's doing it for a reason. So when we're looking at the bonds, knowing that it's such a heavy, deep, thick market, very similar to the notes are even worse in terms of speed, very slow market, we need to pay attention to it. And we can see that starting off the day, we're forming a little bit of a floor. And every time they come back to this floor, buying pressure steps in. But they did trap underneath it one time. That trap led into a very strong rally to the upside. And again, on this kind of market, everything is happening for a reason. And this tells us that this level of support is nothing to mess around with. So when it comes back down to those lows, I need to be very interested, because that is going to be a hot spot. Doesn't matter if we're sitting around the previous high day, gaps, levels, support, or resistance. It doesn't matter, because of this, right? That showed us that this major level of support is here, and we need to be paying attention to it. Now, conversely, in area of interest, we can see that, well, there was a range high right here, but then it had to go a little bit higher, and then it had to go a little bit higher, right? And then it had to go a little bit higher, and it keeps going up. The lows still holding. The lows have held since the beginning of the day, but the highs aren't doing so well. And that's showing that the buyers are gaining strength. The buyers are buying off of the lows with the same aggression, but when it comes to the highs, they're looking for a little bit more, and then they're looking for a little more, and they're gaining faith that the upside is likely going to break out. So when we got this dip back down to major support and we turn around into a huge, beautiful bull bar, you better believe there are going to be a lot of buyers that are looking at that as an opportunity to buy in, assuming that we're probably going to break the highs again and allow them to take out some nice profit targets. So a good rally to the upside in context, both technically and fundamentally speaking. Great movement to the upside. So a beautiful buying area on a gorgeous candle allows the buyers to slam the market up, and you can see they were so aggressive, the very next candle even gapped. It kept gapping to the upside. There was another gap right there from close to open where there were just so much volume on the candles, of those closes of the candles, that it was just getting slapped all over the place. And that's not easy to do on the bonds. As it continued back up, we broke out to another high. But look at the difference. Look at this breakout compared to this breakout and compared to this breakout, right? There's a lot of juice behind this move. This is likely going to be the breakout. Buyers not only will be buying this dip low, they'll be buying the breakout, assuming that it's going to go further, but we have a third buyer in this situation that are going to be looking to come back to the earlier areas of support and resistance and buy that pullback, right? Buy that dip. The breakout, pullback, and continuation is a very common scenario. And if we draw this up from low to high, we also have a 50% just eyeballing it right around there. So everything's stacking up in the exact same location for buyers to buy back in. And lo and behold, we hit that major support, and a monster of a bull bar shows back up. And once again, you better believe that buyers are going to be jumping all over that to shove the market up for another leg higher. So just a great example of kind of utilizing the way that the market is structuring itself, right? One side holding strong, they're not letting go of anything, but the other side is giving up a little bit, and then a little more, and then a little more, and it's giving you clues that one side is gaining grip, even though it doesn't look like it. Just a quick look at this, you don't really see that a whole lot. But looking a little bit further into the candles gives you a lot of clues for the bonds, and that led into a beautiful rally to the upside. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting and a little bit entertaining and useful, and we will see you in the next one.